Welcome to the Breakfast Club. It's October the 7th, 2025. Welcome to the morning markets. What we're going to be talking about this morning is this nice little delicious run-up in NASDAQ. I'll kind of go through a bunch of these charts this morning, but right now we're looking for a reversal time. I have go no go zone, which is right here. That is the top of our premium array in the hourly, just sitting right here. If the next 25 minutes closes us above that level, then I'm looking for a run on range extension, or at least up into that mean threshold of the last up close candle on the hourly. And that mean threshold is sitting right here. So those are my different objectives I've got to look for. We're bouncing off these key little data points I've got here. So I want to see some sort of sensitivity off of those. And if we just continue to run right through it, then I'm looking for the next objective. So I'm just waiting for an opportunity to see a reversal here. That's all. If you haven't already caught your run back into an old high and continuing higher, right at 8:30, we have 8:30 overlaps. Went above it, came back perfectly to it, and then went higher. You see how we've got a little bit of sensitivity off of that level. That's all I'm looking for now. So I want to see a market structure shift here. Yeah, okay. I'm sorry, I was just looking at a chart somebody had posted on our Telegram page there. Just keep watching for more upside here. We were a little sensitive there for a second. Back to the no-go zone. We're on top of the hourly BISI inversion. It's called an inversion right now. And now if we trade it back above it again, and start trading back into it, becomes a fair value gap or reclaim fair value gap. There's the next level. Let's see what kind of sensitivity we get here if we just run right through it. Okay. So ignore that one. So we're looking for this mean threshold right here. That's the last up close candle's mean threshold objective. So I want to see how we act here. And then the next one above that will be right there. I'm just looking for these data points to get hit, see how sensitive they are. Because after this level, we've got about 2 or 3 more, and then new highs. Got to see this 830 get broken to the downside, used as support off this little breaker here, and then start coming lower. All right, let's have a look at ES here. Let's look at a 15-minute chart on ES. These are the upside objectives I can see here. If we just run out this old high here, look for this last 6, 7, 9, 8. This was a really nice little pop above here overnight. You take this candle and move. Just use this little breaker right here from high to low. We traded above it. See how that consequent encroachment of all that holds price. Ideally, I'd like to see this one hold price right here. You see how the bodies respect that? And just go higher. So from 7 o'clock New York time this morning, that'd be a nice little opportunity to put your stop loss just below here and let that sucker run. That's a nice little run there. So those are the upside objectives I have. Rejection block and the old high. You can take this last up close wick here, or the highest up close wick, take quarters of that or 50% of that. Still keeps you inside this premium box. So we'll see how this ES acts inside the premium box and see if you see a reversal there on a 5-15 minute level. So there's our mean threshold for the last up close candle. Little tiny BISI right here. Let me get my that's what I'm looking for. Okay, who we got in this morning? There's two people here this morning. There's me and somebody else. Oh, they haven't said. They're not saying anything. They're sitting in the sidelines, quiet, observing. If you're in watching, just type in the side there. Hello, say hello. I'm not going to ask anything of you. Just give me a hello this morning. Good morning. Or not. There's a D. St. J33. Good morning. Good morning. Thank you for popping in. Welcome to the show. All right. Still waiting on a reversal. Don't sweat it. We got a 5 and 15 minute. There's nothing in the 5 minute. We'd have to see this come ripping all the way back through this little structure and eventually take out this structure down below us here to consider going lower. 15-minute, we'd have to see this SIBI form, trade below this order block, trade back into it and use it as support to come lower. Full market structure shift is still down in here on a 15-minute basis. So far still going up. And sometimes if it leaves without you, don't chase it. Just wait. Or in a 1-minute chart, there's plenty of opportunities that will form today. And what do we say this one was here? This one is the, type that in here, so it's not just says, it doesn't just say objectives. It's the hourly rejection block. The 4 hours already been hit. And we're already inside the daily. So looking for new highs. Remember, this is the go, no go zone, our line right here. On the 1 minute, we've traded above it. We've used it as support to push for the next range extension. So we're just making sure that all these levels continue to get cleared. So if you were in long there and you wait for a take profit model 3 in this case, which is we're just waiting for a BISI to get traded through on the downside, and that's where you close your trade off, because that's what we're looking for here. We're looking for a reversal, right? So if you get this traded through on the downside on a close, then you close out your long position, unless you have a specific objective you're aiming for. But if you want to just let it ride, that's a way to take a run above an old high, is use take profit model 3 to kind of manage your trade. Now just remember, that could be huge returns. Like you may see a huge up close candle and a couple of other candles, and then a big downward candle, which is eating up tons of your profits, right? So unless you're using like a swing projection profile, which is take profit model 4, this is 2 standard deviations here. That'll put you right at, so 2.5 will put us here. If we get through 2.5, then 3 and 4. Through the rejection block, look for this 247, 260. So see how that take profit model 3, nothing's violated on the downside. You may have some wicks, but you don't have a body break through it yet. No body broke through it. And now we've got this huge run up here. So imagine your stop loss is going to be sitting just below here, because you don't want to see this get taken. If this turns into a BISI here, you don't want to see that close below that on the downside, because now we're starting to hunt for a reversal, right? So your stop loss is up here. So you're already way into profit, unless that's an objective that 74. Oh, sorry, it's hit it already. So if that's an objective, you pay yourself right there. The rest is sitting here. So now you've got a big chunk of your trade is off at 2 standard deviations. And now we want to see if we reach for that high. Because how many times have you seen it run right up, freeze right at or just near the high, then roll over and come back down inside that rejection block? So 2 standard deviations, you can pay yourself at that 247. That was our next objective right there. And then the one above that is going to be right there. This will be 2.5. And the old high is sitting at 252. So old high 252. This is what we want to see. So see how you pay yourself at that 2 standard deviations? Now if this turns into a reversal, right as we start to get to the next high, which is that, let me see what this high is here. $252.75. Yep, that's it right there. So if we make an all-time new high right there, then look for a run up into 2.5. Our buddy Derek should be back from his vacation today. I think he made it over last night. So I hope he's safe. Russell, good morning. Morning, Hans. Oh, down here. This. Oops. Right here. That I use that as a fib project or a deviation, standard deviation from taking out that high, retrace back, push higher. There's the old high. See how we came back in there and still did not trade below here? So now this swing point, your stop loss that is sitting down in just below here now comes to here because you don't want to see this. See how that didn't quite fill it? Do you want to see that hold? That's like a C level trade. Didn't fill it for a D. So it's a C level trade. And now you want to see that use this order block here as support to go higher. And remember, we got that old high. We can just get equal highs right now. We've got equal highs. Do we just pop up above here and then start running this first level, take this out, use this as support, and keep pushing lower? That would be the start of the trade for me. In your 5 minute, we already have a 5 minute busy and a potentially new one starting right now. We'll see where this one ends in the next 2 minutes. Morning, Hans Gruber. Hans, I always call him Han Solo. It's Han Solo. Now we've got an all-time new high. That's all you need is just to clear that high out. And so far, take profit model 3 from the entry is working perfectly fine. Your take profit model 3, so you're sitting here and you see how there's this imbalance. That's the next one. So from here, if we get a new one forming up here, that's the level you move to, because this little swing point here and order block become important if we get another trade above that, another opportunity above that, like another BISI forming in here, right? This is nice when you've got this Model 3 that's working quite nicely for you. So it's just a way of protecting your money on the way up. And if it snaps back against you, your trailing stop loss, which is sitting here. See that new one forming right there? See that little imbalance? Now, your stop loss that is sitting down here is going to move to this guy. We're actually below this low here because that change in direction, this little shift in structure below this candle, use this candle as support to come lower. So that's where your stop loss will sit now, and that's your area you're kind of just eyeballing. There's the 2.5 standard deviations now. That's it. Now the next level above that is our 3 standard deviations. And that will be right there. This new one forming right here. Oh, delicious. There's another one there. So let's pretend this is your stop loss. So I want you to see how this this now becomes a new inversion. So you're below this next one. And we entered in down here. So you're already up from the no-go zone. You have 218. So you're at 50 handles now. That's 50 handles right there. And you can see how this would be kind of like a stress-free trade, just trading it up because you got a whole new high. What objectives do you have other than standard fib rejections and waiting for a potential reversal at any point here, right? So if you use the rules for a reversal, then you'll know that your money's protected on the way out. And you're staying just outside of the range of giving it enough room to grow. So each one of those take profit models I gave you has their pros and cons, obviously. Abs, how's it going, buddy? You guys got your balloon festival going on down there? Isn't it supposed to start in October? How's ES doing? Ooh, did that rip through our level or what? Nice. What's oil up to? Our buddy Craig's probably just chomping at the bit to get into oil right now. This is classic, what you're looking for. Michael gave you this setup, and I love this setup. This is a great idea. When you see this consolidation area here, and we break through it, and we get a fair value gap forming, and that will be from here all the way down into this imbalance right here, and the institutional order flow entry drill just comes up, boop, just taps it right there and keeps going. What a perfect entry right there. And it's right off the old low here. So it's a nice little continuation, and that would be a nice dandy little rundown. That's classic Michael. Oh, sorry, right here. That's classic Michael. Wait for a fair value gap to form. You can catch an institutional order flow entry drill. You could have caught it right here all the way up to here. Stop loss would be sitting just above that. Why? Because if this is the reversal and that's the SIBI, we're looking for the bull trap to break to the upside to start running for the next premium objective. If this is just a run, right, we should see this hold. Like if it's really sensitive, it should leave. So if your stop loss is tight, you go, I'm on the wrong side of this. If it breaks that high, that's the data point you're looking for. You're not sticking it way up there. You're just saying, if that fails, I know that bull trap didn't work, and it's going to come back, and I'm going to start driving it higher. Yay! Derek's back. Good, thanks for asking. Yeah, it started Friday. Sky's full of balloons. Oh, that'd be awesome. You should take some pictures, man. I guess you can't post them on there. You can post them on the other channel, though. Looking for the downside objective down here at 60.79, and you're looking for a reversal of Craig if you're in here. No, I haven't seen him yet. So I'm looking for down here. We'll see how we act off that. And you're looking for this would be a really nice little structure break. If you can get down here like that, okay, now we're ripping through it. Wow, if you close below this level and use this as support, you can come all the way up to right there. So here's your sticks. Inside that range there. If a body gets above here and then takes this piece out here, so I'm looking at overlap here, so this would have to take this candle out on a close and take that line out right there on a close, and then use this as support to start pushing higher. All the time we're staying inside these sticks here. you're looking for a reversal. Oh, the Bitty coin. Do you see? Look in here and look for this reversal. Time and price. This is the Tibbs 4-hour turn. So we have 2435. Wait for a SIBI to form or structure break. So you could say that's a structure break. That's fine. You may want something more significant like this or this. So you wait. We look for our, if you don't see anything in here that supports structure, we look for the first bullish candle and see if it gets past it and traces back into it to go higher. Or you look for your first SIBI. If we break this SIBI on the upside, I'm looking for it to retest it and push for this bull trap. If the bull trap gets traded through, which it does here, and we get traded back to it with precision right there, that's where you enter long. A continued market structure. Now you say, I want a bigger market structure shift. That's fine. You've traded above it. You come back inside it. You come back inside it twice, and then you finally go higher. So those are your entry points there on Bitcoin. I just want to see this damn natural gas get up here. Just start getting back up into that area, 20 bucks or so. That's what I want to see. Copper is really on a tear. Look at that, $998 from where it was in the first part of September. Here's the high taken. You come back. Look at that. Tippy tap right on the top of it. You get long at $8.95. It is already at $9.98. So there's already $100 just from, and it's a perfect entry too, by the way. It's a perfect entry for a nice little run higher. And then if you still use your internal range liquidity, there's your internal range liquidity hunt. You're back inside the mean threshold of this candle, or the combination of these candles. That's holding price. You've got another little change in direction. You traded above that, traded back into it right here, and rocketed higher. So $100 in copper. How many handles is, what's that worth per contract? Egads. Look at you go, mom and dad. 35.31. Man, I bet they're chuckle to see that. My mom checks this every day. Good for you, mom. What a hell of a run. These big inflated markets. Change in direction right here. You trade it back into it right there. We're going lower. Take out the lows. Pay yourself. Natural gas. Oh man, gold. Oh, have we got a nice little change? Let me get back to gold in a second. You see that level right there? That's why you got out. So your stop loss is sitting right there. Oh, we had our stop loss down at this one. They had this one, that one formed. So again, you're still following it up, right? So you're sitting right here. If that fails, it does. There, you're out right here, or you're out right there. Sorry, or right here. See how it closed below this level? Came back into that level. Now we're going lower. Market structure shift. That's a short there. That's a short right there. Stop loss is going to just above this mean threshold. We hit 3 standard deviations. Now I want to see a continuation on the downside. So that is your switch up right off that low there. So we'll see if this pans out. Kind of blurry this morning. Yeah, you're gonna have a hell of a time adjusting to your time zone change, my friend. Hey, it's Eric. Welcome back, Eric. Still pushing higher is gold. What are your projections on gold? Gold, gold, gold. Where do we go for gold, he says. Let's get into something a little more delicious, shall we? So, you see how we have a high broken. What do we look for, Russell? What are the rules? Do you have it in your book? Did you write them down? What's the rules? Do you have, what's the rule above here? Once these highs are broken and this premium BISI or discount BISI, premium BISI has been broken to the upside, we're looking for range extension. You got range extension. And in order to have range extension, the hell's these dancing cats in the rain? Meow mix, whatever. What am I looking for? Short on a 15-second chart, an NQ, and out. Why are you out? It's still going down. Why are you out of that? There's no reason to be out of that. Now we're stress-free. Let it run, man. We're hitting the top of the regular trading hour gap. Let's let this go all the way down to the regular trading at 178. How's that? Let's hope it gets all the way down to 178. I'm going to try and learn to hold this sucker a little longer. Anyway, what am I looking for here, Russell? What's the rule? Anybody, what's the rule once you break this high? If you want this to continue going higher. Okay, so where we're sitting right now on this, look at your hourly chart. So we got 3 standard deviations. How beautiful was that? Let me remove that. Right, it's 3 standards. Now, looky. Right on the 1 hour chart. What are we coming back to? We've broken this high. You had 3 drives up higher, and you're looking for a retest of that high and the mean threshold. If this mean threshold gives way, what does it tell you? What does it tell you? It says, I'm going to come lower. And what am I going to reach for? The one that never got reached for. The never one that got tested, right? So now I'm looking for it to, if it breaks through here, I'm looking for a retest of this city. So we talked about this right on the Beezer. You see how that long that we had there fails right there? We're out of that trade and we wait for the market structure shift, and then we're back in on a short. So you took this all the way from this no-go zone to that exit, then to enter in again short from there to there. So you see how you would have bought this all the way up? Now you're bringing it all the way down. It's magic, man. Once you see it, you can't unsee it, my friends. Did you answer my question yet, Russell? I'm not giving you an answer till you tell me what the rule is. Looking for a bounce off the swing to move higher. Yeah, I guess. What would that be, though? Well, how would you, hint, grade that response? Looking for a retrace base. What level? No, I don't see a graded answer. What's your graded answer? Mean threshold. So, okay, yeah, you don't want this. You want this, right? Remember, we want a fair value gap to form above an old high. That's a good sign. So that you want to see hold. Create a fair value gap. Then what do we say about that fair value gap here? Now that we've created it above that level, then we look for a graded response. So we don't get our graded response yet until this candle finishes, and we get the next one come down and give us our A plus is just to take off and go. A level is institutional order flow entry drill. A B level would be the consequent encroachment of this, which would also bring us back into here. And look at it. So I'm giving you the answer. This is the rules you've got to put in your... Oh, you don't have to put these. These are just my rules. You don't have to listen to my damn rules. What are my rules? What do they mean? They mean nothing. So if this is our fair value gap that forms above, positive sign, graded response, your A level can be anywhere for the first 25%. So that's your institutional. A plus is go. A to 25%, which is your institutional order flow entry drill, and it'll also give you a tap off an old high. And a B level, which is 50% or consequent encroachment of the BISI, which also gives us this last up close candle, most sensitive. A C level response is about 70% optimum trade entry, which will give us the top of the highest premium BISI, which is right there. That'll give us our continuation on the upside. Now, if I close below that level and I take out that half, if I take out half that wick, then I'm looking for a retest of the level that never got hit, which is this one here. That one did for continuation. This one didn't, and they happen to overlap. So that's an area of support sensitivity I want to see if it holds, if we get a wick down there. I don't want to see a body get through here, because now I'm looking at that level. So those are all the things you're kind of looking at from a graded response. But it's not a graded response until that candle finishes on an hourly level. A 15-minute level. Same thing. Now you have a 15-minute fair value gap that formed above an old high. Now you're looking for this candle to come back in and do A pluses continue to leave. It just leaves right from there, right? A level is full institutional order flow entry drill. B, which is your consequent encroachment. And also, strangely enough, consequent encroachment, I've told you before, lines up with old highs. So this is how I talked about before, about how do you predict this candle here, where it's going to end. Well, if you look at this here and you say, I'm going to take that candle and I'm going to take, I'm going to take from, let me start this again. This candle here, and I'm going to line it up with 50%. So let's say this candle didn't appear. You take 50% of it and you line it up with the top of this candle here. And that usually, once that one's still going, this one, in order for that one to close, you're looking for where would this next candle open and come down to. Here's an objective. That's how I reverse engineer where this candle's going to stop coming down. You expect it to say, so as soon as that one goes up, then the next one opens. You go, ooh, I want to see it possibly come down to, and then pull that up and say, I want to see it come down to 4001. That's where I want to see it stop and then start going higher again. Or I want to see it stop right there and make a small candle and then come back and retest it later. Because my 50%, which is this old high right here, I want to see if that holds. Does that make sense? That's where your 50% is, lines up. It's not always accurate, obviously, but it gives you an idea of where you want to see price run back to. Anyway, that's how you reverse engineer this candle here. It's not a micro thing. It's just something I was working on. Okay, so we are into the mean threshold of that hourly candle now, and we're starting to chip our way through it. So remember that hourly level that we're looking for. There's the mean threshold. We're into it. So now my stop loss, if I use my other method, which is the same method we used on the way up, we use the same method on the way down. Take profit model 3. So now we've actually got a trade on that's zero stress, and we'll just see where it goes from here. Whoa! Look, see that level? We got to trade through this level right here. That's what I'm looking for right there. So the high of that level, which is right there, which is this level right here. You're inside the sticks. We got to change in direction right here. Market structure shift. Body breaks above it. We do not get an opportunity to come back and tap it. We look at this next level. Body trades above that little tiny level right there. You come back. Do we tap it? Do we tap it? What's the low, the close on that candle? The close is 61.04. The low on this candle here, 61.04. So there's your entry right there, right off that imbalance. So if this one doesn't work and the candle rips right through it because it's got intentions of going higher, then you wait. Now you think, good, now if I come back and hit my breaker or my bull trap, I'm going to go long. If it runs through that one, you take the last one. Always take the last one. If it would have ran through this one as well, then you would take that one. Because these ones, you think they might want to come back. You didn't get a chance to visit this. You didn't get a chance to visit that breaker. And you didn't get a chance to visit this little fella right here either. So that's the only one you got. So you got 3 down here that haven't been retested yet. So if this does decide to hit a premium level and then reverse and come all the way back down again, what am I targeting for? The untested levels. $61.03. Yeah. Nice call, Russell. So I want to see this candle act as support. Now that we've traded below it, I want to see it come back, use this support. There's also this BISI right here. If we start to trade above here, then I'll close my trade off. Because that hourly mean threshold can hit and then start reversing on us, right? So I want to prepare for that potential reversal off of a level here. And I only have 1 on there. So if I had like 4 or 5 on there, you definitely take 1 off either here or here, looking for this level. So we're watching to see if this breaks on the downside close on the hourly. And if it closes below that, then I'm targeting this, all this down here. Any questions with that right now? So if you're looking at box to box trade, box or box to box down here inside the largest range, I'd be looking to tag down here somewhere. This should actually be sitting right above that level there, because that's the first. No, there's a little guy down here. So this is the change in direction right here. I didn't see it here. I should be out of this trade. So you can close it off right there. See how it came back into that imbalance? I want to see it trade through there now. My stop loss is going to go here. I don't want to see it get back above there. It's already revisited this. And that would be the out right there. It's the change in direction. Give you your opportunity to close your trade off. And now you just sit and wait for a new setup. So if we, now that I'm still in this and I'm holding it at that old high here, if this closes off here, you'll see it comes back and takes my stop now. You can say, oh, dude, follow your rules, is you're out there. So now I'm looking at this candle as validation. So if I see this come back through the mean threshold, I'll close that out because that's my I'm out. Oops. Out. All in one candle. I'll wait now for this to get broken to the downside. So I wasn't watching carefully enough. I had this sitting here. The rule is if you see an inversion, so this one here, you could have used this one here as the first broke above, so you're out of the trade. 1, 2, there's a couple of those, you're out of the trade. Now because we got to change in direction now to go higher. We broke the high, so this change here, we traded back into it. We ran the high, so there's your change in direction. So now you got to wait for something clean to set up. And we're right at 9:30 open now, so let's see if this rips all the way through here. Another example of take profit model 1 or 3, run up, take profit model 3 on the way down, wait for market structure shift again, and continue hunting for down here. And there you go. Let's just hit it right there. So the one that wasn't tested is now retested. We still have all the way down into 190 that I could reach for. So I'm looking for a retest on this level and those little imbalances right there. There's the retest. Now I want to see that come lower. If it trades back through that level on a close, there's the perfect retest. Keep coming. As soon as it takes that low, move your stop loss to break even, pay yourself. Get into a zero stress trade because now you don't want to see it come back into this level again. It's done its thing. You want to see this extend the range now. Keep pushing. So as soon as it takes that low, pay yourself, break even, go to a zero stress trade. Your stop loss is sitting where? Just above here. So if that trades right back through you, like this, see, to me, there's no reason it should come back into here. So I'd be out right there. And this is the kind of chop you can get into around 9:30 to 10 o'clock. That's the reason I'm not in this trade. I'm just looking at what I want to see. Whether or not it gets there, we shall see. Remember, we want to see a body stay above here, a wick down into here. And so far, that's exactly what we got. We tested that level. Our bodies have not broken through here yet. And see how we've run back through here. You don't want to see this coming all the way back. Once it's done its thing there, you want to see this leave. You don't want to see it come back and retesting it again. Cleaned out the highs. Now, if this is the next price leg higher, or lower, I should say, then look for down here at 190. I'm looking for the next one is about there, 207. Remember our box-to-box trade down here. Watch that level, the 830. That wick was the damaging wick for me. The damn Uric wick. See how we're still inside this order block cluster here? And you see how we did not break that one up here? Good morning, Craig. How's your oil doing? Did you catch that run? We're talking about this here earlier. So even if you waited for a market structure shift here, you want to see a body get above here. It does. And now you think, here's our first presentation fair value gap starting from the bottom here. We're looking for an old high to get retested. It doesn't. Old high to get retested. It doesn't. Next set is here. So there's not very many places you could have actually got on here. Once you see this breakout of here, that's the only place that was a clean entry. So I'm hoping, Craig, you caught something delicious there, because your next upside objective from a box-to-box perspective would be right here. We'll see how that holds. Consequent encroachment. Look at that, right on the money. Now, typically, the high premium tends to have the consequent encroachment hold, and then you get a reversal. So you'd be looking for a 15-second reversal on this. And look at all the stuff that was down here, never got a chance to get validated. This one here, you got a validation right there. See how the body trades above that level? And then trades back into this huge, messy SIBI. So if you didn't get in right there off that perfect level there, this one you don't get a chance to get into, and this one you don't get a chance to get into until layer 1, layer 2, and layer 3. So layer 1 you get in, layer 2 you don't get back to. So that's it. That's all you get there. Drawdown. You'd have to have your stop down below the bottom of it here. Small leverage, big stop loss. You see this high taken, change in direction. That can totally throw you off there. And because this is the swing is inside this guy, you have to put your stop loss below the low. High taken, traded above it. This is the fair value gap that occurs above the high. This is what I've been showing you this morning here. It seems to be like the reoccurring theme. Here's your fair value gap. In here, it runs all above that high, creates our fair value gap. Then we have institutional order flow entry drill right here. It retaps the high and then sends it higher. So there's another entry right there off the high. If we're using that take out a high rule, right there. See that level? See how sensitive that level is? We've now traded through this. I want to see this retest this now. Right there. Now you can go short there. Stop loss would go above that mean threshold. I don't want to see that revisiting there. You can come back up and tap the top. The perfect place is right there. Right there. Perfect place for a short. So we're going to take that one there, and I'm going to put my stop loss right up above that one there. No reason for this. There's just no reason to see me come back up into this wick. But we'll see where that closes in the next 14 seconds. This I'm saying, okay, that could be your loss for, or your mohawk, your little spike above that level. We'll see that closes. If it closes about, it's closed above it, follow your rule. I'm out. I'm on the wrong side of it. That can continue going higher now. See? That's recognizing when the perfect entry would be like right there and you go, oh, good. I'm going to catch that for a short. If I'm on the wrong side of it and it closes above me and comes back and taps me, I got an opportunity to get out of the trade. It went and it started to move a little bit. I'm out because I used the open. My extra little rule is if I use the open, if it doesn't immediately come back and give me a chance to get off the trade and I see it even twitch in the wrong other direction, I'm out. Now it could still come back and tag this, but I'm out. That's more bullish for me now until it breaks this little structure, because you don't want to play the trade below, trade above, trade below, trade above. You just keep getting beat up inside that little bull flag that forms here. So wait for a structure break now. So I want to see this trade through here, take out this, come back and use this as support. And then see it come back deeper into that range, which is inside this range right here now, because that's your discount box. Premium, discount. Look at that. Inside the premium, change in direction. You don't get anything in here. Market shifter. You want to see this come back and use this breaker as support to come lower. And if it just keeps chopping through this, then you're back into this deeper range here. Remember this one that was never hit? That one was. You're targeting here. Once that gets taken out, this little level here gets taken, swing. I'm targeting that level there. Gold. There's your fair value gap. See that little institutional order flow entry drill, and then it made a little high. Pay yourself at the high, because if you're on the wrong side of it, now if it trades back through here, that's why you pay yourself at the recent high. So if you opened here, it went down lower, came back up, and then stop there, pay yourself. Again, my rule, not yours. You decide. We're through the mean threshold of this candle, and you've closed all the way below the BISI here. So market structure shift, catch this, and start running for a discount box. See how we went higher? You trade off here, body trades above it. Look at how many times you come back into that candle. No body breaks the mean threshold. We came back inside the BISI. Boom, boom, boom. Multiple times. Now we're going higher. Let me get all these standard deviation things out of the way here. So you could have caught this run up, take profit model 3, take profit model 3, and then wait for market structure shift, enter long. Stop loss will be sitting just below your bullish order block here, or your breaker. Maybe a couple of ticks below that, or one tick below that, you'd still be safe. And as soon as it takes out a high, pay yourself. So either that high, this high, half that wick. Inside this objective, pull your fib tool from here. If you're using take profit model 1, you got in your trade below the 50%, gets to 50, pay yourself. Take your trade and move it to break even. And then once it gets back above 50, you get 62%, move to 50. Hit 70, move to 62, and you're out. So that's a quick internal range liquidity hunt, and you can see we're already starting to switch back into it. There's no reason for it to come back and visit here for like half a dozen times, right? Internal range liquidity, you pay yourself on the way up using Take Profit Model 1. We're into some chop here. Morning, Shepard. Saeed, good morning. Gold needs to hold level with fair value gap. Do you target 50% of the range on that oil? Short D, 50%. Yeah, you target, use your fib tool for here. So this is where I would have targeted. Oh, sorry, let me use my fib tool here. Because this is the range that you're working in, right? As soon as it trades below that, you get short right there and you go, I want to see this go short. And I'm aiming for 50, 62% internal range liquidity. And what's sitting at 50%? We have the first presentation fair value gap is right there on the money. So you get that, move to break even, pay yourself there. If you get 62, pay another 10% there, 10%. And 70% was really nice to see this get revisited. And then 88 all the way down here is right into your second. So that's what I wanted to see. And it literally went boop, I'm out. Now see how that next one gave you an opportunity to get your trade off at break even and then went higher. But we knew we were on the wrong side of it right here. And that could have switched up on us again. We could have come down here. That's why you got to wait for a little swing below that little swing point here. You want to see a body break below that and use this and this now as more padding for a certain run to 50% or more. But notice as soon as it went above that, got out of the trade, I think it was like a $20 loss or something like that, because I'm on the wrong side of it. Now, if you're really bold, you say, as soon as it comes back into this level, I'm going to take that for a long. But you see how it went low, then it went high. It could go low again and then high again, and you just keep chasing this BISI. So you got to wait for a structure break here. So there's your structure break. And what do we have? When we have a high taken, we have a fair value gap. Is it occurring above the high? Yes, it is. Institutional order flow entry drill. And what is that keying off of? This right here. So institutional order flow entry drill, which would come back and retest an premium level. Delicious. And a continuation. So this is like an A plus run right now. See how it took out that high? A plus. It opened and went higher. That's A plus entry. Takes that high, pay yourself, move to break even, because if it rolls over and comes back down again, you get another opportunity to load on a portion. And has it extended the range? Yes, it has. So now you're going to ask yourself, is this the potential reversal after taking out the old high here? Is this the reversal potential to come lower? And you're in a super premium now. So do you want to pay more premium to go higher after it's already taken that high? Or do you wait for a market structure where you see a nice displacement again with a nice candle like this occurring above this level, creating a fair value gap, institutional order flow entry drill, or an A plus graded response, and away you go. Does that make sense? So if your stop loss is sitting right below here and or at break even, now that you've paid yourself there, you're still going higher. That's your A plus setup right there. But you could be bold as brass to take that, right? Because the high's already been taken. I'm late because I was trading crude green, but nasty AM. Good morning. Gold needs to do you target 50% of that? Craig, yes, I do. I would have, yes. Or if you're using Take Profit Model 1, then yes, Craig, you would be targeting 50% first off. But if you're using Take Profit Model 3, you would have waited for the first break or the first SIBI to form in here to go, it gets broken to the upside, then I'm out. And preferably a SIBI that breaks an old low as well. That would be even more. So you see that nice little A plus setup? See how it's still even? And now you've got this forming, so now you're right back into your Take Profit Model 3. As soon as you get that old high taken out right there, you pay yourself. So you're in a stress-free trade, even off of this right here. Perfect entry. a retest of that level, you can use that one, or you wait for this this BISI to form. It forms above the highs. A plus, it leaves right there. That's graded response. So now you've seen all combinations of a graded response. The A plus, the A would be here. The B would be right in here, which would be the bottom of that level overlap. So you got overlapping confluences there. C would be 70% of that. And you look over here and you go, what would line up to 70%, 75% closure? A D is a full closure. What lines up in here that supports that? And so your stop loss would be sitting just below this low because you don't want to see that get retested again. So if your A plus setup is here, you kept paying yourself. This is a zero stress trade for you. Right from here is a perfect entry. Scale. Stop loss would be sitting just in here. That's it. You don't want to see it come lower than that. Tippy tappy and go higher. Stop loss is there. Look how close that is. If it pops through it, you say, who cares? I just made my money. We've now cleaned out some old highs. I want to see this hold, take out that candle and this, use this as support. Now I've got more. I'm coming back inside that range. There goes gold, someone says. Okay, so you see how that level right there, it's already popping through it already. All you are, because if you just got one, remember I've mentioned this before, if you only have one level and you've got this level, it's been popped through, see the mean threshold's been traded through, and this level is, this is all looking like, oh good, we're going to come lower. What level didn't get retested? Oh, this one did. It got retested. This candle's high is open along with a premium array over here is been retested. And if you're really looking for a tight premium array, it's right there. That little fella right there. We came back and tested it. So now you've got an argument for this wants to go lower. It went lower, hit the target. We want to see support price to go higher because see, it never got hit here. It was just shy of it here. So it came back, finally retested it here. So you got to give that all your consideration. And now we're back through this level with a wick. So you're looking at the mean threshold of that candle. And now you have to get back up on top of this to see this go higher. But that to me tells me it wants to go higher. You want that to hold. If that's going to come lower, that has to hold. And you're already eaten into it already. And that mean threshold is next. And if you close above here now, in the next 8 minutes and 31 seconds, if you close above that, you look at this level here as support to go higher. Unless this pushes a big bold candle up there, then you want a rinse and repeat. You want to see a fair value gap form, come back, institutional order flow entry drill, take out a high, pay yourself, and get into zero stress. That would have taken you out, so you would have made a little bit of money and you're sitting on the sidelines. So it's a quick way to protect you. But there's lots of overlap here, right? What you want to see and what could happen. And that's worst case scenario is it comes down, taps this and keeps going higher, which is what it's doing here. So your line in the sand is that mean threshold right there. You want this wick to, this body here to close below this level, and then you're waiting to see if we get another drop down, find support inside here, take this level out, and then get a little structure shift here. And that's a 15 minutes. So you go to a 5 minute. So if you're looking, what you're looking for on a 15-minute chart is you want to see this hold. So in order to see that hold and that key level on a higher, being on a higher time frame, you go down to the lower time frames and say, is there support in here? Do I see a reversal occurring on a 5 or 1 minute chart? There's the 5. See how you hit it right there? This is good. That's what you want to see. So 5, hit, 1 minute. Do I see it on a 1 minute chart? So we have a high taken, a little tiny imbalance, trade below, come back inside this little imbalance right here. Draw it out on your charts, right there to there. See how we traded back into it? Beautiful. Now I want to see this level get taken on the downside. It does. Either trade back to it or see if a body trades below here. Body trades below it right there. That closes below here. Trades back into the mean threshold of that candle. Continues going lower. Reaches for our discount box. Hits it. And now you see a reaction of it. I want to see if this body gets taken on the upside. It does right there. Just closes above it. Comes back. Gives it a little tap. And then continues higher inside this range. Internal range liquidity hunt. Now we've got the premium box right here. Now I want to see that premium box hold. So box to box. I want to see this premium box hold, and I want to see this new change in direction above an old high here. I want to see that level hold right there. You can come back, give it a little kiss right there. Perfect. So now you don't want to see this get taken to the upside. Otherwise, look for this as the next price leg higher. So hold there and then roll over and take this one here on the downside. Support, keep pushing lower. And you're targeting, I guess you're targeting 50% of this mean threshold here. So far, your 5 minute, if that 15 minutes going to hold right there, or right in here, you want to see this level hold. If that's going to hold, and that wick's just done a little bit of charging up inside this last down close wick's 50%, then I want to see this level here get closed below. So 369 or 39 or 996. 996. So this has to hold here. See how we opened above it? Not a good sign. That opening above tells me it wants to go higher. And all it did was open above, come back inside, give you all 3 levels to load on to push higher. So this mean threshold has to hold on a wick level, and then trade back into this, trade through it, support it, and come lower. Those are the key points I'm looking for in gold. So you can see how you can argue 2 different directions. If you want something, don't marry the idea, just look for support on the lower time frames to support your 15-minute reversal. So you got to get closed back below this 996. Morning, Ali. Support this candle here. I want to see that go higher now. I'm going to wait for 10 o'clock. What is Bitcoin doing? What the heck happened to natural gas here? Well, copper's made an all-time high. Is it going to break the 1,000? Oh, it's already broken 1,000. 1,001. Same as gold. See that? It hit the $4,000 mark. I remember a couple of years, or like beginning of last year, people were saying, oh, gold's not going to hit $3,000. Yeah, gold will hit 3,000 by the end of the year. Last year is what they were predicting. Right? So December of last year. Oops. Just do this. Try some. So they were saying it was going to hit 3,000 by the end of the year last year. It didn't quite hit it. It's 2,500. But look where it's come from the beginning of this year at $2,600 to 4,000. It's almost doubled in price. Well, not almost. It's going to hit 5,200 for that. But that is a 80% return, or 80%. You would have bought gold at the beginning of the year. Isn't that crazy? Cray, man. Cray. And there's no signs of it changing. No signs of changing. What's Bitcoin up to? Bitcoin ran out the rejection block. Imbalance. Catch this little reversal here would be nice. Trade through. If we can get a trade through there on a body now, through this level, come back, find support at this or this level, because you don't have to wait till all the way up here, because that's more than 50% of the range, right? So you want to see this come back into here to catch this long into 50% of that if you're using your take profit model 1. Change in direction. See how it went below it, above it, below it, and then finally opened on it and then took out this level. So you got to wait. If you get taken below it, above it, below it, above it, back and forth in that little candle or at that little consolidation, you got to wait for a structure shift. So wait for it to get below here. It does. Trades back into it right there. You're short. You're inside this range now. So you're short oil. Or you're just waiting for that one to get broken again to the downside. Come back, tap it, go on short. Stop loss would sit up here. Because we can still use this order block as support, which is what we've done here, to go lower. So I want to see this hold, roll over and come lower now, and pull your fib tool on this, and you'll probably find from this one or this one, 50%. So pay yourself at 50%. Move your stop loss to break even. So wherever, if you got in there, stop loss goes to break even plus the cost of the trade. 62%. Now move it to 50. Pay yourself at 62. Now at 70. Move to 62. Now at 75. Move to 70. Watch. If it comes back, now you're out. So that's the internal range liquidity take profit model 1 right to perfect 75. So if this is an optimum trade entry reversal here and starts to go higher, you nailed it all the way down. You paid yourself. Now, if that continues to go lower, who cares? You wait for a market structure shift, wait for this to get taken, find support. Same thing we did up here. Dine and dash, man. Dine and dash, take profit model 1. And this is just back to sloppy and choppy again. Look at that. Delicious. So take profit model 1. Paid yourself to 70%. You wait for a retest here. If you're in take profit model 3, so you enter in here, you wait for the first SIBI to get broken. So you're chasing this sucker down. You don't want to see this level, that candle get taken to the upside. Those of you who are take profit model 1 are looking to re-enter in here. I'm giving you guys some gold today. Black gold, Texas tea. Pay yourself again if you're looking for an objective like this. First presentation fair value gap. we're now below that level. Give this a tap. And your take profit model 3 is still active. Now you always have to think, there you go, let's just tap that. You want to see it keep coming lower now. It could run all the way up into this imbalance right here. But keep in mind, you've swept these lows here. This could turn into a reversal back inside this range. Right? So you got to look at this. And 50% will put you here. So that you don't want to see this broken support. Then 50% you're back inside that range. That holds price. Come lower. So we're still using this candle as support, as the breaker that takes out highs. It's the parent breaker, or you can use this larger one. You don't want to put your stop loss above here though. I've got my change in direction here and a breaker right there. I don't want to see that mean threshold get taken. So there's the mean threshold. That's been filled. This has been retested. So you don't want to see it close above there now. You're done. Let's go. You guys are quiet. Everybody's talking on. There you go. Keep coming. Pay yourself if it's this low. Move to break even if you're short there. No reason for it to do that. You're out. So we try that. So that trade from here, it wicked back through you, took out that. I'd be out of that trade right there. So if this continues to go lower, you wait for market structure shift and use this candle as support to go lower. Yeah, I guess they could use that too. Yeah, there's no SIBI on that side, so I guess technically you could still use that. That would have took me out there. And no body got above there. Wicks did the damage. I might have to rethink that stop loss idea with these wicks. If I put it above this whole thing here, that would be too much of a profit give back. Well, if you've paid yourself here, I guess it's a small portion left on. So you see, you have to have your own set of rules based on, are you going to target this as an objective, even in a take profit model 3? Do you still have targets you're reaching for? Look at that. A little wick doing a little damage, and we're still going lower. That would have got me. So now you look at this first presentation as, do we get some support at that? Three cheers for the London low. Trying to get my trade on. Let's see it, Derek. close below, open, short there. Stop loss will be sitting up here. Targeting this big monster down here. Here, here. Nice perfect entry there. As soon as it takes that low, move to break even. Zero stress. Pay yourself at that low. Look for this level here. Look for this level here. Box to box internal range liquidity hunt right here. It happens to overlap with that bigger one here. That one's just got hit. Watch for this one now. Bingo, done. All right, so box to box. It's a really nice little trade right there. Box, all the way down to box. Delicious. Look at that, right to the beezer there. 6 a.m. candle. I want to see this whole price here now, and still send this lower in oil. What are you guys doing over here? Chop. Better play in something that's got a lot more cleaner price action. This stuff shit. That's just, you know, if you keep trying to find yourself, you keep battling the markets in here, you're just stressing your system. This is way cleaner, man. Way cleaner. I see my mistake here now. Not just because this kept going. I just see the mistake. I didn't use this here as support. And that I haven't got a body traded above here. So the rule is if a body breaks the upside or the SIBI here on a take profit model 3, which it didn't. Not a wick. That was the psych wick. Again, the psych wick got me. As that candle was forming, I was like, oh, we're closed above that. No, you haven't. That hasn't closed yet. Now it's closed. And you were like, ha, ha, ha. Gotcha. So no body closed. So take profit model 3 would still be working. So you'd be above here, watching this level here. Or this one right here right now. So watching to see if this breaks. If it breaks to the upside, you're out of that trade from here to wherever that one is. Right now you're still in it using take profit model 3. Ignore what I did here. The rule still applies. You got to endure all of this retracement. That's called fear of missing or losing money, greed, whatever. The greed candle. So 50% of the oil range, yeah. So now you just look for this to get broken to the downside and use this as support. So I want to see a body get through here and use this candle here as support. See how it's just banging around inside it right now? Good. Create a nice little bear flag for those retail people. Pop up, take them lower, and then watch this level because we're looking for this to fill this little guy here, 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 and here. Remember those levels we talked about that never got a chance to get tested? That didn't get tested. This didn't get tested. That one's the only one we got on the long. We talked about that already, and we talked about this one here. Oh, sorry, this one here. So this fair value gap did not form above that high. We had a bigger run below. But this fair value gap here formed above the high. Retest, go higher. You're in oil as well, Russell? Just be careful. Watch this discount. SIBI's been hit and we're getting support at it, right? So watch this level. If we close above that, then you're looking for a run above this level, and they're all down closed candles. There's no bull candle in there at all. So right now, so far so good. Keep coming lower. You want to see this accelerate through here now. It's got to really pick up some speed. Push through. Ah, good. Yeah, I'm with him too. I made my little trade this morning. So Craig, if this would be a nice little opportunity for you to buy crude. Oh, you're looking for a buy crude again lower. Yes. Buy it lower. Look for this little box down here, my friend. And then you're looking for any opportunity to see this accelerate. Accelerate your breath. Did not break the high. Come on, come on, push, push, fast, fast, fast. Let's go. So far, so good. I can't believe people bail when they're seeing. We had like 27 people in here. Now we're down to 19. People are bailing, and you're seeing absolute freaking precision here this morning. Crazy precision, and people leave. Man, you're missing out. You're getting like laser precise levels here, man. Retest. Retest. Yeah, I feel your love, brother. I feel your love right back at you. I guess a lot of people come in and they say, put your trade on, let me copy your trade. But you're seeing so much more gold instead of just copying my trade. Look at this. Oh, there, keep coming. Keep coming. So now you see how, Russell, you see how this is already forming? Start to develop your eye over here and start to go there, and there is, I'm anticipating what would happen if this just ran the lows out here. This created a fair value gap, which is the sweep below the lows. It's right inside consequent encroachment of this SIBI. If it swept through here, see now you see how that SIBI is forming? If it sweeps through that, this now becomes the bull trap. You want to see if that holds, traps it. So 1, 2, 3 levels. Do they go through all in one candle? If they do, then we're anticipating a run on the high. But that becomes I'm looking at this as the potential change in direction. So the stop loss would be sitting right there, because you'd say now this becomes our market structure shift, our SIBI turning bullish, break this bull trap supports, and then starts running higher. So watch this level. See this here? Oops. So you anticipate that. Kind of watch. Once those lows are taken, always be looking for this right here. And then look for the very first candle to the left. See how we've ran above it now? We've been talking about this, and now you're watching bull trap. You want to see that hold, and it's on a TIB set 18 here. 18, 19, 20. There's the mean threshold. It's been tapped, and we even popped through it. So rejection block. So you see how it starts to weaken the idea of this going shorter? Now you're looking at saying, all right, now I want to see this close below here and use this as leverage to go lower. So I need to see it accelerate here, not just come back, retest it, and go higher. Russell, one day, one and done for today, probably. Good for you, Russell. Rubbish price action. D, you are the daddy of internal range of liquidity. It's official. Liquid daddy, liquid daddy. We are still here, D. The important people are still here, man. I love you all, man. Thanks for sticking around. That makes me think reversal added 50% for oil. Yeah. See, you see that larger range, right, Russell? Look at that larger range. You're at 50%. Well, you've just dipped into the discount array, and you've got a reversal forming here. See how we ran above it? We've come back inside it, retested it, and see how we're starting to run up here already? So we anticipated this. The moment we saw that run below there and we saw that candle and we started talking about if this forms a SIBI here, that candle closes and forms a SIBI, then and we trade above it, then we've got a reversal or a change in direction at 50% of the range that you expect to see a continuation. And at 10 o'clock, change in direction. So a TIBS along with I got too many confluences that tell me if this bull trap doesn't hold price right now and blast through that level, then I'm looking for the setup is nice displacement candle. What do we want above here? That's right. We want a what? What do we want? We want a fair value gap. We want a fair value gap to form up there, and then we have a graded response above that high, and then we've got another run back into the range. Does that make sense? It's a rinse and repeat strategy over and over and over again. Oh, Craig's buying the crude right at 50%. So if you're buying it right off of here, Craig, you really have to make sure that that level does not get traded through. And we've already traded into it once. So this multiple trades back into it just makes me think it's too choppy. I want to see it tap it and go leave, leave, leave. And we have not. So far you're sitting in a bull trap. So this may be a premature run because this range is so small. You want to be here and then trade 50% of this range. And there's only two candles in that range. This one here and that one there. And there's a premium right here and a discount right here. You went discount. Like, let me blow this up so you can see it. This is internal range, small range liquidity hunt. Look, watch this. Let me get rid of this one over here. So discount is anything in here. Let me take this here. So 50% is right. That's 50%. See that portion there that's still in the premium, right? So look at that. Hit it. So important. So that's how I break this up. Even if that's the SIBI, that's not the full discount. This from there, right there, to there is the discount, not that portion. That is in the premium portion. So you've just come back into premium, discount, and then we start looking for what's up in here. This is a premium. So you put that back. Premium. See how we've hit it? You've hit it. Haven't traded through it yet. Now we've traded through it. We've come back inside it. Body's respecting it right here. And then you want to see it go higher. You want to see it go higher, not lower, because now we're going to go back into here to here. Discount portion. So there to there. We're boxing back and forth right now. So you don't want to see that level give up, Craig, because your bull trap is what's holding you back right now. That's why we wait for a market structure shift. If you're just doing an internal range liquidity hunt, all you're doing is back and forth in there, and it's a matter of 3 cents. You're hunting liquidity, and that's how you hunt internally. That's the master liquidity hunt from here to here. See how that, look at those levels. These are just like beautiful levels, man. But you got to know what you're looking for inside that little range, right? So you don't want to see that. Go, Greg, go. That would be the perfect entry, because if it trades through it and comes back to it, you can get out right there. And the moment it takes that high, the high of this candle here, pay yourself, move to break even. Now you don't want to see it come back here again. So there's a perfect entry. You've already paid yourself. You're at the bottom of the candle, just above it, so you've paid for the cost of the trade. Now you sit back inside this range and you just kind of chill. Now this candle, you say, I want to see this candle act as support. We've validated it now. I want to see its high, its consequent encroachment right there, right off a 6 a.m. candle, go higher from here. Or you can come down and tap that, or the mean threshold. Those are the 3 levels in that candle that you want to see support. Forget all this other stuff here right now. I want to see this candle act as support to go higher. And then I want to look for, I'm targeting these equal highs here until we get a nice little displacement with a fair value gap above. Yeah, there's only 3 cents, or was it 3 cents? Yeah, 3 cents between this. There's 61.30 and this premium level right here at 61.35. Okay, so 5 cents. See how it ripped through it? Now it's ripping through here. Bull trap's holding you. Bull trap's holding you. That's why you wait for market structure shift, man. Now you're below this level. So now this is definitely not good for long. Why? Now we're looking for, did we just consolidate around 50% and then start our next leg down, hunting for this box down here? That's why you're going to be careful of those, Craig. Unless you're looking for an internal range liquidity hunt and it's too small, it's only 5 cents worth of popping around inside here, not worth it. Or maybe it is worth it for you. But the moment it breaks that, see, look at that, retest, go lower. Rejection block, pay yourself. Right there, perfect short. See how I told you, if it trades through that level and you're wrong, it comes back, gives you an opportunity to break even right there. That's exactly why that, ooh, it traded through it, I'm on the wrong side of this, gives you an opportunity to get out of your trade, get back into your short, takes that low, pay yourself. That's precision, man. That is precision. That was the fear. That's fear realized. Magic. 21 of you get to see that. If you don't understand it, go back over the video and watch how I explain each one of those levels, specific data points inside that small range, and why you split them up the way you do, and you see how sensitive they are. This is a good video today. It's a good show. Man, I'm giving you some good shit here today. Nice retest, 50% of this wick. Let her run. We're looking for here at 61.13 now. Oh, these were the other sticks we put in here, didn't we? Get rid of them. Those are just sticks. What's going on over here? A whole lot of nothing. There's a whole lot of shaking going on. You have no hope of 62 just yet, Craig. All the time you've got this continuation down here. Look for this and then look for potential for a reversal. Be careful of these bull traps. And we talk about them as they were happening. You see the importance of this one here? Pay yourself at rejection block. Again, you didn't even get the high. Again, it's a rule that you have to, again, it's just my rule. It's a rule I have to be very vigilant of. Because until you get confirmation, and usually we're looking for a nice displacement, then don't touch it. So we can get back and now retest this SIBI right here. We traded, tested it, paid yourself at the low. Now you see this one here? It's the same kind of situation we had here. That right there, now you're dipping into a larger, like near 62% of the range now, right? Is that 62% yet? Are we at 62%, Russell? Almost. So there's the retest. So you see the change in direction here. We've swept the lows again. We've got another change in direction right here. We don't want to see a body close above that. So now you say to yourself, what is my bull trap? The bull trap is this cluster right here. From that one to that one, all of those, you want to see it get above that and a displacement if you want to see that go higher, Craig. So we're back into bull trap, held, bull trap, or this one here. This one's hiding inside the larger one because those are all overlapping. So take them all, wait for a displacement above here with a nice big bold candle. Then look to get into that for a run back up into 62 bucks. But if you're in it and you still feel like it's going there, then don't worry about what I'm saying. Hunt for your 62. I wanted 61%, hence very small, 3 cents. What DAX did. DAX, Ali, did you catch the 5-minute breaker this morning in DAX? I want oh, you want 62 to go lower. Oh, 62%. I'm like 62. That's way up there, man. 62. I'm with you now, Craig. I'm a little old, but I'm with you. I'll catch up. Oh, you've added to another crude long. All right. Who's in DAX? Let's have a look at DAX again. What's DAX up to? This is interesting for what's going on with DAX. Look at this. All this chop. So yesterday we had this, I was looking, once we got above here, I was looking at this and I wanted to see it run up and take that high. So again, once it takes this, you're looking for the pay yourself at the first high. So it came down and you go down again, finally ran up, pay yourself, move to break even. Then it gapped down to start the next day, the next trade hours or whatever it was. Oh no, that was 18, 15, 18. Okay, here. This was an hourly basis. So that's the next one. Gap right down. So it would have gapped right through your stop loss. Ran all the way back up. Took out the highs again. Still didn't hit that rejection block. Traded back through this level. So now you say, I'm on the wrong side of this. This is going lower. As soon as it trades back into it, that beautiful optimum entry for a short right there. Because if it trades through it, comes back to it, you're on the wrong side of it, we're going higher. Right? So, because you'll see that right here. So it went below it, came back into it. Now I'm looking for it to extend the range. Pay yourself at that candle, extends the range. And then all into rejection block, pay yourself at rejection blocks. Then it started switching up again. And will, if it gets above this candle here, which is also this, comes back and retests it right there, its mean threshold, and then runs higher, pay yourself at the next high. You've got to get in the habit of paying yourself at that high or that high. Pay yourself. It reverses on you. Now it's back through here. Now I'm looking for this to come lower into this range. So anyway, that's how you kind of look at it. Those were the targets that never reached them. So you have to be flexible. You don't have to recognize If you got lost taken out here, if you had your stop loss resting here and it gapped down, that's where your first printed price is. You got your stop taken pretty deep. So just get back in sync. You get all your money back plus. And again, that's just following the rules. So right now, DAX is crap on an hourly basis. You've traded through it, and now we're starting to roll above it. So you're below, above, below. So now you got to wait for structure shift. There's a lot of liquidity sitting above you, and these two targets are still on the payroll. Meanwhile, back at oil, the bull trap is still holding. Look at that. Pay yourself at rejection blocks. If you're short, if you're long here and you tapped in right here, you pay yourself at rejection block. That's internal range liquidity hunt. Because if I take, oops, let me put that back there. If I take my, this is how you hunt internal range liquidity again. Not that you would actually have been trading this, but if you were from there to there, if you traded in here, you're below 50%. See that? Traded above it, right there. You get in below, you ran up, 60%, pay yourself, 70%, pay yourself, pay yourself, pay yourself, pay yourself, take out the high, pay yourself. And you're bumping your stop loss up along the way, and it finally came back down and closed you out. That's an internal range liquidity hunt. Really quick, and you got to be quick enough to recognize that. That has to be something that you 100% buy into and recognize real quick. If you don't, then, but the data points are still being hit, you guys. They're still being hit, even in shit like this. I want to short maybe this PM indices. See how this bull trap's holding still? Still targeting down here. $61 is really cheap for crude. Get on up there. You're still bullish inside here. You're back down. Bull trap came back up. Bull trap's like, hell no, I'm going to keep taking your fingers off every time you reach for that. We're back inside this again. And if you cut through and you look for the premium puppy again, remember this little premium one out way over here? Draw it out. What are we inside still? Look what's holding it. Those 4 levels are that level right there. That imbalance. See it? Ding, 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 ding. Bouncing off of it. So premium, discount, premium. So you got discount to premium, to discount, to premium, to discount. So you're boxing back and forth between that little array there and this guy right here. And yes, we cut through candles. $60. That's still profitable in Canada. I worked in the oil sands for a decade almost. And $22, I think it is. $22. They're trying to get, they can get oil out of the sands now for about $22 a barrel, between 22 and $26 a barrel. So add another $20 for crude off of that, so $44 a barrel. This is what we want to see. Nice little displacement like that, hey? Little fair value gap forming above there. Ooh, baby. That's what you want to see. That's what you want to see. Bullish. Bullish. Yeah. Bull trap finally. The springs were finally broken. And now we're going to get, you want to see some support here. But you want to get a body above here. Not just a wick. We still don't have a body above there yet. But if you're looking at this level here, you want to see that stop, create your fair value gap above. No, it's not doing it. Just wait. You still don't have a bull trap broken yet. Yeah, so about 42 to 46 bucks is overall Canada. We want to see it as long as it's above 50 bucks a barrel. They're making a couple of bucks here and there. Still not a body here yet. Still wait. You're going to wait for that structure shift. This is a nice little candle, but we wanted to see that form a little fair value gap above here. So you got this fair value gap here. Trade below it. Use it as support. Then we're coming back down to box internal range here. Yeah, it's not above here yet, but I do like this retesting this. Right at consequent encroachment. Let's go. Start marching higher. Meanwhile, back at the ranch, we finally get some movement. Market structure shift here inside this last up close candle. You use all of them. That is your mitigation or a breaker that takes out this high. So all of this is what you're looking for. Take your low to high. 50% right there. That's as high as you want to see it come back to. If you're using the bodies only. There's 50% of the bodies of all of those, which happens to line up with our regular or our first presentation fair value gap. If you're using just this guy here, sorry, let me get rid of that one. If you're just taking that candle there to there, see how we came right back up inside it perfectly and then went lower. So you don't want to see this get broken. So once you see this downside and it takes that out and you see this, you go, great. I do not want to see, I want to see this act like a bull trap, hold price back and just get a run back through this level, clear out that, come back, retest that, keep coming lower now. Keep coming. Looking for 6 a.m. We hit that. I want to see consequent encroachment of 6 a.m. now. All this is your target. And you've hit it here. Let's see us pop through here and use 6 a.m. to keep leveraging lower. How's our oil doing? That's it. There you go. There's your trade above. See the body above it? Come back, find support at it. Away you go. Rock it up, buddy. Rocket it up. Go, go, go. Now, I don't want to see this mean threshold give way. So we traded above it. Body respects it right there. Look at that. Now this candle, I want to see act like support and start pushing higher. I don't want to see it eating through it. 6 a.m. candle. See how the chopping is chopping around in here? You want something clean. You want to see just a tap and go. Like this is the kind of stuff you want to see. Clean tap and then just leave. All chopping back and forth. Chop, chop, chop. Tippy tappy. And let's go. Let's go. Midnight open. Yes. I like it. There's the retest of the low. Beautiful. Keep coming. Take that. Pay yourself. Move to break even if you're in there. You're in the rejection block, so you can either pay yourself there or wait for that low. And you know how I feel about that. You're back in the 6 a.m. and midnight open is sitting right here at this whole midnight open range. And your first presentation, midnight fair value gap, is sitting right down in here. So that's definitely where I'd be targeting for. Now let's just go back for a second and look at 3 standard deviations right up here. If we use we're looking for this as our upside objective, and you're looking for your first opportunity to see the change of direction, like the Sunday's analysis I gave you this weekend. As soon as you see that eye get taken, you look for any opportunity to see. So here's our first one right there. So that's our old midnight, our old high right here. Now I'm looking for the first fair value gap BISI to get broken to the downside, or an imbalance or something like that. So nothing, nothing's been closed right here. There's your first one. Trade back into it. Perfect. There's a 266 perfect entry right in here on the wick. 266 entry for a short. Are you bold enough to take that? And you leave it there. Stop loss goes above the high and let it run. So you caught from here, and look where you're sitting right now. If you just take that first opportunity to catch that, or you might say, I just want to see a structure break with that, then I'm happy and I'll take that. You take that, perfect entry there. Stop loss goes above the high, comes up multiple times. You just say, I'm just going to keep weathering that. My stop loss is there. I'm going to let that sit. I want to see it get all the way down to my discount box down in here. I'm aiming for my hourly box, which is right here. I want to see it tag that at 174, and I'm out for the day. You're in from up here, right there at 262, and you're aiming for 174, 164, and 154. Bing, bing, bing. And what does this put us at? 159 is the open, midnight open. That's exactly what I was talking about all week. So you gotta have the courage to say, as soon as I see this, I'm looking for my first opportunity, whether it be a 1 minute. And we saw the limitations of the 1 minute on the weekend. So let's go to a 5 minute and see if we can see a setup there on a 5 minute. There's your 5 minute right here. We come back, retest that. Your stop loss goes above there. So you're in at 260. So you're still sitting at the same spot. So you would have got in here. Same place. And you'd be on this until you see another discount box. Here's a discount on a 5 minute. You're looking for box to box trading. There's box to box. So we're looking for this 5 minute box right here. This is my 5 minute box to box strategy right on the consequent encroachment. Ba-bam. Done and done. Albeit crappy price action to get there, it got there. Do you have the courage to hold that stop loss until it finally gets there? Or do you say, no, it broke this, and we get caught up in all the noise that's in here? Just look for your first opportunity on your higher time frame. Say, I just want to see it It happened here. Good. I got my turn. Stop loss will go sit there, and I'm going to leave that now because I expect that to be the high. If it doesn't trades back through me, then I look for extension. I just get back in sync with it, make up whatever little loss I took from here to here, and get back in sync, get my money back, move to break even, and start all over again. Wait for the next candle high. Okay, Craig, take care, buddy. How's your oil doing? Oh, found support. Nice. That mean threshold held nicely, ran higher. Are you long on this, Craig? You were long earlier. You've now got support to go along, and look at that. Nicely done. Hopefully you're still in that. You're collecting some. This is the next macro. Internal range liquidity hunt, 50-62% on the way up. Looking for a premium box and these little guys up here. So I'm looking for a rate here. Let's take profit model 2. Which is box to box. So this box, in order for this to get confirmation, you need to see it trade back above the bull trap, find support at the bull trap, and then start running for the premium box up here. Stops in green. Oh yes, way to go there, Craig. Way to go, buddy. Well done. So despite the fact that you were in here early, we still see our confirmation. So this level right here, you can reduce all your stress, Craig, if you just wait for that market structure shift to occur. Remember we were talking about it here. It kept going lower. You think, oh, it's still going lower until we get proof otherwise. So here's our change in direction. Now I want to say, not that change of direction. I need to see with the market structure shift. Now I want to see support at that. It did. And now you can say you can be more comfortable about that running internal range. So it's less stressful versus having to say, oh, I'm on the wrong side of this, and you let your mind start to take over. But if you're like Craig, you just know your oil. He says, I know oil, man. I understand this living thing known as oil. Right there at 6779. Your next one, Kevin, is sitting right down in here. Delish. Box to box. Look at that. Box to box to box. So if this runs here, I expect to see that come down into here. The moment we can break that level there, I want to see it run deeper into here now. And you want to see it accelerate. So come back, find support off of here, and then really accelerate through into here, and hopefully pop through that, and then start running for this first presentation on Monday. You should love crude, man. when it gives you some clean setups, it's a beauty. It really is. Just hit the box. Make me happy. Ooh, Goodyear tires down at $7. Charlie got the Wordle in 4 today. Good man. All right. What you doing, Hadi? Hadi's into a trade somewhere. Where he, oh, he's out already. Are you in this NQ? Mean threshold. Oh, look at that. Tippy tappy. I want to see that keep pushing through here now. Reach for the box. Trust the box. Trust the box. If you start getting market structure shifts to the upside, then I'm looking for that hourly one way up here. Otherwise, keep coming. And you can see if it closes below here, you see it come back up at 190 and hold at 190 and then roll over and keep coming lower. That would be my ideal. If we can get through this mean threshold right here we've just bounced off of. I want to see that close below that mean threshold. So watch market structure here. We have a fair value gap, market structure shift, and a nice displacement candle. Show you intentions to go higher, then look for this next breaker here. Change in direction right here. Open below it, come back inside it, and lower. Hit this level, the premium box as support. We went through it, but we never gave back. Can give it a little kiss, right? Well, you're inside it now. You want to see that push off of here, find some support and keep pushing higher into that range now. Into this larger part of the range. There we go. There you go, Kevin. Discount box done and dusted, baby. That's nice. Now you want to see it close below that. I love it when it works, man. Let's see it close below here, and then I'm looking for range extension. If it doesn't, just pierces it, turns around and heads back up again. What are you looking for a reversal? 5 minute? You got... Well, I don't see anything on a 5 minute setup for a reversal here. I think you'd have to be back above... You'd have to take this candle out here. Let's see it dive down. I want to see it eat through here, close off, and then start driving for the lows. And dig back into these two levels here. Looking for that 6 o'clock candle again. Is that the 6 a.m. candle? I think it is. Looks like 8:30 open. We really loved it. Done for the day. Thanks, dear. And see you later, Hadi. See you all tomorrow. Have a great day. Discipline closes his trades off at 11 o'clock. The lion's share of the running has been done for the day. You're getting into lunch hour lashings. So how much do you want to keep pushing your trades? Especially if you've been good today and we've caught some beautiful trades today. You've had some awesome trades. We've caught all the way up. We've caught down. We've caught the reverse in oil. That was clean. Gold broke the level, found support at the level, pay yourself at the level. Gold, even gold, or you've got some trades there. And Bitcoin, what's Bitcoin up to? Ooh, look at this. Body trades below this level right here. Come back, support, hit it, run lower. Even Bitcoin's giving you nice setups. Oil, copper, well, we got gold. Gold's still running. Everything has got some nice little setups today. What about our friends over here in DAX? There's a little tiny imbalance right here. Oh, no, there's not. They're overlapping. This one right here. Nothing. Order block to the left. Come back. Find support at its mean threshold. Holding price. Run up the highs. Come back to it again. Rejection block. Look for this candle's low. Its mean threshold. Rejection block. Half the wick. High. Looking for those targets still. It's really choppy. That's an hourly. Don't like DAX. Keep your powder dry in DAX. Laurentian Bank is still bouncing off of that change in direction, and you do not want to see a body get below here. Gary, if you're watching, you don't want to see a body get below that. Bank of Nova Scotia, you don't want to see a body break below here. So you still got a ways to go yet. Toronto Dominion. Highs taken. See if this creates a fair value gap here. We have no fair value gap above the high. It's occurring below the high. So that tells me you want to get back into this range a bit more. Look at the little piggies. Do you guys notice how the little piggies made their turn on the 4 hour? Watch here. And then here. And see how these overlap? Right. There. They're overlapping right here. So you want to see this one get taken to the downside, come back up. If it takes the low, look for the low to provide support. The low does. Half the wick holds perfectly on this wick here. Half takes it lower. Looking for a discount box down here from box to box, and you haven't been able to trade that one. I'm sure you'll find something in here on the hourly. Like if that's our change in direction right here. So look for your hourly and you'll see something in there, I'm sure. Yeah. Right. here, come back up. No, you wait for this one to get taken. That one gets taken. Finally, you find some support there. Goes lower. This SIBI, BISI, SIBI inside this huge range. It gets traded through on the downside, comes back. You find perfect entry for a short there. So our piggies are on a run down lower. And you catch that early in the 1 hour. But you see it again on the 4 hour. And if you go down to a 15-minute chart, let's say a 15-minute chart and see if we would have seen something there. There's the 15-minute. Body breaks below it, comes back up inside it, short there. Stop loss will be sitting up here. You could do it either here, or you could say, I want to see this candle hold price. Bodies respect it. Finally took lower. That's your breaker that takes out these highs. And the piggies are on the run back to the squealing all the way home. Oh, look at that. How delicious is that? There's your midnight open. Done. Aiming for objective. Done, done, done. Scale out all the way down. Now look for rejection block. Come on, let's do it. Right here. 131. And you can see how that would have, right from that 1 minute reversal at our 3 standard deviations, looking for any chance for a reversal above an old high, which is right there. Wait. Oh, got it right here, short. Leave it there. Now leave it alone. Michael would have left it alone. Leave it alone. Then it finally, time and price accelerates and reaches objective 1, 2, 3, and then final objective right there. Right there. There's a rejection block. Done. 6 a.m. Run for the lows. And then our next objective is down here at 108. 108. Leave a piece on for 108 to 045. 108. 108's right here. Could you have held that one all that time? And there's 108. Done. Next level is 076. Midnight. The other midnight open. 076. Come on, come on, come on. That's the rejection block on the hourly. That's rare. Your crude oil. Oh, 1 penny away. You're right. It was just 1 penny away. Which begs the question, if I draw this across here, it begs the question, do you take the opens or do you take just the gap itself? If you took the opens, look what happens. The open and the close here, open, hits it perfectly. But we're going to stick to our method, which is just the fair value gap. And it's running through this level now. Opens on it, keeps coming lower. So now you can see this run back into this internal range of liquidity. You don't want to see this get taken, and then you want to see it start running back through this level. It might be just doing a nice little push higher like that. Darren, do you have time and an opportunity to look at US? Let me put it in here, man. I'll do that for you, Hans. I'll do that for you, Mr. Solo. Mr. Solo. Mr. Solo. Let's find a little box there. I can share NVIDIA. Who cares about NVIDIA anymore? That's so yesterday. What are we looking for? We're looking for US 10Y 10-year bond market. I haven't done a bond market in a dog's age. What do you want? Daily, weekly, monthly, 4 hour? What do you want there, Hans? Some genius was working on London Low. That Spanish food and drink must have been affecting my brain. Sorry to hear that, Ollie. Daily, please. Okay, here's your daily. So in order to prove we're in the bond market now, is it algorithmic? We're going to kind of do a little review from back here at the beginning of the year. So here's your change in direction. Body breaks below the low. Come back. Look at that. It's perfect entry for a short at 4.689% for a short. And this would be no different than if we were doing this. And we're looking for that. And we go, ooh, look, we've taken out that high. We've got a fair value gap. We've broken below it. I want to see this act as support now to go lower. And then I want to see this low get taken, the mean threshold get taken, and then the low. Okay. So there's your retest right there. And we're waiting for the mean threshold to get taken. It does. Come back inside the candle, take the low, come back inside that, and go lower. It did give you a little bit more wick back up into this premium level again. See that level there? Traded back into it multiple times. Went lower. Wait for this side to get taken on the downside. Comes back up. Ooh, just shy of tapping that there. Going lower. Now I'm looking at this low. I want to see this low get retested. It takes that low out, comes back, retests the low. Change in direction again. Body trades below it, comes back up inside it right here. Short, take the low, change in direction. Body comes above it, comes back inside from there to there. Tags it here, went higher. Look for the premium box to get hit. It does. Now you want to see a body trade above it. It does. It opens above, comes back, taps it, and then sends it higher. Takes this high out. Change your direction. This is algorithmic, man. I don't give a shit about news and all that other fundamental crap about bonds and shit. That's algorithmic. Look at that. Change in direction. Trades below it. Comes back up inside it. Bam. Drives down. Discount array again. Box to box trade inside 10-year bonds. I don't know what the news was those days. I have no idea what's going on, how interest rates are affecting bond rates and so on and so forth. But look at how the algorithm's working. Regardless of all that, our setups are still occurring. Craziness. Craziness. So first one doesn't come back to it. Second one is in here. You come back inside from here. Where is our first one? Right from there to here. Okay, just so I'm not like form fitting this. I'm looking for a body to trade above it. It does. Comes back inside it. Goes higher. Looking for premium box right here. Trades above it. Good. Now come back inside it. Go higher. Extend the range. Does. Look for this one here. Does it trade above it? Yes, it does. Does it come back inside it? Yes, it does. Does it go higher and extend the range? Yes, it does. Trade through this level. Come back into it. Do we want to see the attack on this low and a retest of the next or this low and inside the next range. There's nothing in here except for here. So we come all the way back down into here, change in direction, takes out the high, another change in direction here, trade below it, trade back inside it, extend the range lower, wait for this level to get broken, it trades below it, all the way down into, oh, we didn't get rejection block, you got mean threshold. So you want to see if this holds. It doesn't, you're on the wrong side of it. It's coming back into this range. There's your premium level, back down to the small little range here, 50%. I bet you that's 50%. 50%. Oh, it's actually not. It's not 50%. No, it's shy of 50%. Okay, I was wrong. I don't mind being wrong. So, change your direction, comes back up inside it. You want to see that go lower. It doesn't. It trades through it. You go, I'm on the wrong side of this. Comes back. And now I say, do we get a retest of this level? Before going up and taking that high out, takes the high out. Now you're thinking, if I get a body above here, I want to see this provide support. It does. Goes higher, takes out the next high, hits our next premium array. Trades above it, you think, now I want to see that range extend. If it trades back below here, I'm on the wrong side. It does, comes back inside it, extends into the rejection block. Trades back up in here. I don't want to see it break through that. It doesn't. It holds. Now I want to see this continue going lower. Takes out our little fella over here on the downside, extends the range. Trades back through that level again right here, runs back up into premium portion of that, pretty much that candle. It's the lowest down close setup that we've got. Trades through it, into it again, takes out this low, looking for a BISI, or this is not a BISI, this is a volume imbalance. Does the volume imbalance get retested? Right there, it does. Go shorter, discount, next discount box is over here. So extend this from here to here. We got below it, inside it, extended the range, little tiny piece here, then went back through it. Now you're looking for this to run higher inside this range, looking for targeting this area here. And now you've got a small, you got a mini rebalance test. You're inside this range. So you want to see this break above here and you're aiming for there. Who asked me about this? Hans. So keep your eye on this little level right here. That level right there. So consolidation, that's holding. I like that. Going higher. Wait for this little bull trap. You got to get above here. You got to get above here, then aim for this. If you can get above here, start pushing higher. Until then, you've just came back up into this little immediate rebalance right here. We've hit that, and now we're back down into this small little imbalance down here. I'm going to put that right there and right there. If we get below this, use it as support, start running lower. If we get above this little fella right here, and this last up close bull trap, you want to see that go up into this range here. How's that? So it's algorithmically driven, man. It totally is. That's daily. What does a weekly tell you? So a weekly tells you right there, you've traded back up inside this, hit it, and now we're rejecting off of it. So on the weekly level, if I was looking for 4.109 to close below that, and you use 4.109 to 2.0, as an indication to run for range extension. Look for breaker or look for rejection block, and then start hunting right down here on a weekly level. I'll be looking for right there. The first spot would be right there. Second spot would be right here. So if we can close below here, I'm aiming for rejection block and this level right here. Got to get below here though on the weekly. I'll put that in there because we'll keep an eye on this here now for you, Russ or Hans. See how we've hit the top of it on a weekly level? Now you want to see this bust through here. And you're in this little tight range, right? It wasn't something delicious like you don't really have anything here on a weekly. No body below here till here. And you didn't even get a retest of that one. You just look at this last down close candle's wick. Its mean threshold doesn't even get tapped. No, there's nothing in there on the weekly. This right here, see how we traded through this? And this retest, that's what you want to see over here. You want to see pop through, retest, just like this. Pop through, retest, and go lower. And aim for this target here. This same setup on the weekly, right there, is what we're looking for right here. Okay? Just so you know, that's where the algorithm acts there. I want to see the same thing here to here. How's that? Hopefully that helps you there, Hans. We'll keep an eye on it, and we'll see if that manifests itself for you on the daily. You're welcome, Hans. You're welcome, sir. Do we hit the object? Oh, look at that, you guys. 045. That is the freaking box to box on the hourly level. Oh, sorry, I was looking at the wrong one. Either way, it's still, you still hit your box. Now I'd like to see this kick off of here and start running all the way back up into here. I'd like to see it 153. Retest 153. And see what kind of reaction you get at 153, which is midnight open again. 153 to 159. I'm all right with that. Anywhere inside here, the midnight open range. Anywhere inside there, react off of that and start driving lower. And take out this low. Stand by. Where'd you off? So is there anything else you guys want me to look at? There's only 10 of you left, so we might call that a quits for the day. Watch this dive down into this low and this 4-hour fair value gap, looking for that to take this low out here and dig into this BISI here. The B shall help your recovery, Derek. That's right. Thanks, D. I should be recovered from my jet lag in a day or two, I'm told. How old are you, Derek? A day or two? What are you, 20? That bee juice you're drinking is probably I'd say yes, maybe if your bee juice is working, but a day or two? Come on. You're not 20 anymore. You're going to be exhausted for days. Like this, you could write the rest of this week off. I tell you, coming back from England was just like a nut punch, man. That was the same 7, 8 hours. I think, what were you? How many hours were you away? 5, maybe? Right after midnight. Let's see if this keep pushing lower now. Look for this BISI down here. Six hours. Oh, your 6 hours. Yeah, 6 hours is still quite a lot. Like when we were in Africa and we got back to England, oh man, it wasn't so bad. But when we got back from England back to Canada, man, we were tired for days. Days and days. A good 4 or 5 days for us to get back off of that. So you're a better man than me, Derek. I hope your recovery is quick, man. Good call on your London low. Oh, look back here. Look at this. Dare we say 981? 981, 981, 981. Let's put that down here as a little a level to look for. $9.81. That should be the bottom of this old regular trading hour gap. Oh, sorry, 982.75. 982.75. Right there. Let's see if we get down in here. It's 1 day per hour of time. When you get over 60, it's at least 1 day for every hour. I don't travel that much, so I have no idea. That's what they say for your body to adjust. 1 more day, 1 more. So when I go to Thailand, I might as well just sleep for 2 weeks. They're 13 hours for me. So that would be literally a 2-week vacation. I'd be just starting to adjust after 2 weeks, and then I got to come home. Yes, that's an old regular trading hour gap over here. 292, that's what I've got as an objective there. So we'll see if we get that. Equilibrium is 0.48, so that's right there. Right there. You got that now, Derek? Right on the money. .045 is the bottom of the 3-hour candle. I'll give this a few more minutes before I leave because I want to see if we reach that, out of curiosity, I want to see if we reach that 982 level. So that's box to box inside the hourly range. 0.45 right there. 0.45 is the bottom of the discount box in the hourly. Just so you know, that's the 4-hour one right here and the 1-hour one. The 4-hour sits right there, and it's exactly the same as the 1-hour one as well. Right there. This candle's low is 45.50. This candle's low is 44. So it's actually taken out the lows there now and fully filled this candle's high, which is 44.50. Done. Done. So now you're looking for a chance to see a reversal. So for me, you'd have to get a structure break above here. But if we've now popped below that low, this we'll still call this equal lows, and we're in this bit C here. We have run out to the tick, this discount box. This was never realized. on the 1 hour. This one was never retested. This was never retested. So I've got 1, 2, 3 levels, important levels. If that holds, and we start to run back up here, we clear this out here, we're looking for these areas to get retested. You're very welcome there, Hans. Have a great week or have a great day. I'll see you tomorrow. I just want to see it hit the 982, and then I'm out of here. You see what that would have been this morning off this level? 982. That would have been 280 handles. If that hits this, that'll be 280 handles. The turn to filling that regular trading hour gap from the other day. See if we can get our level. This turned out to be a bit of a salad day for me, D. Well, I'm glad you got some salad there, my friend. I got some salad today too. A little bit of dressing on there, which was nice. We've called tons of really good opportunities for you guys today. So if you took them, you definitely made some cash today. I gave you some solid setups, some beautiful. This was a really good show today, if I do say so myself. Institutional order flow entry drill. Yeah, it was a really good day. This has been really good detail today. Yeah, I got some salad and the dressing today. Come on down. Just give me the 982 so I can sit there and go, hey, hey, hey. And then close up shop. Because what's next after that? We're looking for 996. Oh, 996 is up here. So 996 and then 980, then 973. Oh, that was from the other day. That was from Sunday. See that little tiny volume imbalance right here? That volume imbalance, or actually it's a price imbalance right there on the 4 hour. This is the 4-hour price imbalance right here. That's what we're targeting. And it starts at 999. You don't want to see this close above here and take out this candle. That's a complete fill of that BISI we were looking at. It's just come back and completely filled it. Now I want to see if this just comes back inside this range here. I don't want to see this. If we get through here, then I'm looking for this whole range to 50, 62%, so on and so forth. And the ultimate break in market structure for me is up here. So all the time this is I want this to act like a bull trap now, and I want to see that send price lower. Getting above here. I want to see this hold here in ES. I want to see a hold here. Roll over and come back down again. You got this small imbalance up here. If we get through that on a close, take this out, then I'm looking for a return. So we could even retest this level right here at 67.63. Finally, oil here at our level. So we just retraced back into that range. Retested this bull trap here. Hit in here multiple times. Finally ran above it. Here came back support. Finally hit our upside objective. Support, support, support. Our next little upside candle was right here. Nice little imbalance right there. Hit it. So now I want to see if this holds price and send it lower. Now they hit the premium, or if we end up pushing through this mean threshold of this candle. The last up close candles open was what was hit. So you have those 1, 2, 3, 4 levels that we're looking for there, and that's hit the 1, 2, third one. And we have this level right here where the bodies are respecting it right now. I want to see if we close below here, take this out on the downside, and whether or not we attack this candle. You want to see this high get tapped and then leave, not these 3 candles rolling over around in here. You want to see it tap that and leave from here. If it's clean, it'll just should be just leaving. Otherwise, look for this little breaker here. Its mean threshold 61.65. I don't want to see that get taken on the downside. Otherwise, we have an attack on the more than 50% of this run. But that will be your objective. Run to premium 1 and premium 2. This is the retrace on the 10 o'clock or the 11 o'clock retracement for continuation. No body above here yet. I want to see this drive down here now. Our bull trap's holding. Rejection block at 67.49. Then look for 67.46. That's your next objective here at 67.46. Then I'm looking down here. If we can get through this candle here on a close, come back and use this as support. I want to see this reach into these 2 discount boxes down here for ES, which could be a huge run for NQ as well. We'd be looking down in here. These levels here then next. These 2 midnight opens. Could be the rest of the run for the week. Tuesday high of the week. Institutional order flow entry drill off there. Keep coming. And just tap my level so I can close the shop down today. We're inside that little gap we saw in the 4 hour already. We're at the consequent encroachment of that. That's it right here. It's not uncommon for it just to come down, tap that, and then reverse and go higher. It's like when those, sometimes you see those premium arrays get hit and it just hits into the consequent encroachment and then turns. So we'll see if we get the finish. Come on, give me the finish. And then you're looking for all the rest of the arrays below you here. that just drives through here. Look for that. Look for this area to get retested and go lower. To 82 big figure. Come on. That's the finish of it. Consequent encroachment of the wick of the daily, or the consequent encroachment of the lowest down close wick there. Yeah, that'll put you right in the daily consequent encroachment as well. Half that wick looks about half the inversion. And then see if we fill the rest of it in here. Yeah, well, this would be the final drive down, but I really like these opportunities for this to come back up into here. Like, to me, these are nice strong draws on liquidity if we can get a reversal. Otherwise, you're still just driving down to the next objective, 25, 50, 75, full wick, daily, and then all these objectives down here still. Consequent encroachment or mean threshold of this candle. Holds price. Takes out this candle. Use this candle, this little inversion as support. Keep coming. Look for range extension. And just give me my 982. Then I'm going to shut her down right there. And it's probably going to go lower. And I'll keep it. I'll chat with you guys on the Telegram channel if I see something on the turn. Yeah, that's a huge run. Now I'm trying to think about how we could have Seeing 3 standard deviations. Perfect. Nice little standard deviation reversal. Catch that for a run on the 1 minute, 2 minute, 5 minute, whatever. And then look for support. Support broken. Continue to drive down. I'm just trying to think about how you would stay in this trade for a longer period of time, because you can get really caught up in all the noise of the reversals and all that stuff in here. I think a way you could look at this is take profit model 5, 6 would be this. I'm just thinking about this. Oh, I should have wrote this down because I had to take profit model 5. I was going to share with you guys when I see you in Toronto. I'm just seeing a new one. I have to write these down. If I don't write them down, they get lost in the ether of my brain. My pen. Okay, I got it. I can't remember what the hell 5 was now, but I got 6 now. I've got 6 written down. So we're in that 4-hour discount, that price imbalance, and we're popping out of it. So you want to see if this gets above that level. I think I got it. I think I got it. Remind me, Russell, we'll talk about Take Profit Model 6 in Toronto. I have to have something to share with you guys that's new and exciting. See if this bull trap breaks. You're in lunch hour now. If we break this larger range, I want to see a market structure shift on a 5-minute up here and use this as support if we're going to come higher. Not just this little one. I want to see the bigger one on a 5-minute get taken. Because that would include this SIBI here as well. A little bull trap. Look at that. Rejection block. Change in direction. Tag it. Go higher. Last up close candles. Targeting rejection block. Internal range 50%, 62%. Like, that's beautiful. Literally came down and finally took you out here. Right to 88. Even a take profit model 1 would have been a killer one there. That would have gone to, your entry would have been right there and there. You had 2 stages of scale in. Run higher. 50%, move your stop loss to break even, take half your trade off. 10%, 20%, 30%, 40%. It still didn't come down and tag you. Then you finally, the rest of it's done there. And then it finally changed up on you. That's full internal range liquidity. Crazy. I think that's going to be it for me, my friends. Thank you very much for tuning in. Thanks very much. I'm sending my love, my friends. Be kind to each other. Forgo the violence. Just talk it out. If you have issues, talk it out. Learn to talk your issues out. I love you guys. Thank you so much for tuning in. I appreciate it. Let's see if this bull trap holds and comes down lower, or if we run back into this range. I'm not content for a change in direction until we break this high here, not this little one here, just so you know. But otherwise, you guys have an awesome day. I will see you tomorrow. Don't forget to like and subscribe if you're new to our channel. We're here every day for you. Take care, and I'll talk to you tomorrow. Or I'll see you on Telegram.